Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to point out, just to be clear, give me just a moment. I need to make an adjustment to YouTube here. Okay. And just to be clear, I'm talking, when I talk, go to setups and talk about setups, I'm just talking about a setup and an underlying. And that setup can be taken any way with either options or shares or futures, depending on what I'm talking about. So for example, if I'm talking about a setup in the S&P 500, there are a number of ways to take those trades. ES futures, SPY shares, SPY options, SPX options. So again, I'm just talking about using the options market for my analysis, but the trades that I talk about, the setups, can be taken with either futures, shares, or options. And finally, on-topic questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. All right, let's get started. And what I want to talk about today, my agenda for today, quickly go over the news that came out this morning, then go through my positional analysis. Then I'll talk about my plan for the day, and then finally I'll talk about setups. So first of all, news for today. I'll just go through this briefly. There was a lot of news. At 8:30 a.m., consumer spending, PCE, and it looks like it all came in slightly lower than forecast. So there's the PCE, slightly lower than forecast, slightly lower than previous. That was the year, for the month, in line, lower than previous. And then at 10 a.m., consumer sentiment came in a little bit lower than forecast and lower than the previous number. And the market interpreted all of this as bullish. And just let's take a quick look at the CME Fed Watch tool. I'm going to get the latest number here. So right now it looks like there's slightly greater than a 50% chance that the market is pricing in no rate hike at the next FOMC meeting on May 3rd. So right now this is showing 52% chance of a 0 basis point moves, no hike, versus a 47.5% chance of a 25 basis point hike. So really no change from yesterday. This is about the same as yesterday, and there is a change from last week. So based compared with last week, now there is there's less chance of a 0 basis point move and a higher chance of a 25 basis point move. So anyway, from yesterday to today, with the data that came out this morning, no change. All right, so that was the data for this morning. And then let's talk about our positional analysis now. So I'm going to go to the Bookmap chart for ES, the S&P 500 futures, and this is showing how the market interpreted the data that came out. First of all, at 8:30 a.m., the initial reaction was bullish, and then the market came back right to the upper edge of the expected move at 9:30 a.m. Eastern Time, and then moved higher. And this upper edge of the expected move is for the week. And now the S&P 500 has sliced through a number of levels. So before I go into this chart any further, let's take a look at a larger time frame. So here is the SPX, S&P 500 index, just showing price and spot gamma levels, key gamma levels. This is a 20-day, 1-hour chart. And let's zoom in. Most of the spot gamma levels are concentrated up here. And these are levels that are provided to Spotgamma subscribers for a variety of platforms. I'm showing this for Thinkorswim, and we'll go back to the Bookmap chart and show the same levels in just a moment. So this is a 20-day, 1-hour chart. SPX moved down to the 3,800 level and then has rebounded back up to around the 4,100 level. All right, let's take a look at another Thinkorswim chart. And this is for today. This is a 1-day, 1-minute chart, again, SPX, showing the spot gamma levels that are in play for today. And note here the call wall at the 4065 level, and the SPX is trading above that level, the call wall, and that is typically a level of resistance. All right, so those are the levels that are in play for today, and then the next resistance level up above that was the 4080, and the SPX is trading above that as well. And here's the 4100 level up above. And let's just go back to that larger time frame just to point out a couple of other levels. Here's the put wall way down here at 3,800. That's the strike with the largest net negative gamma that can be expected to act as support. And here's the 4,000 level. That is the absolute gamma strike, the strike with the largest absolute gamma. That's also the volatility trigger. That's Spotgamma's proprietary gamma flip level. And below that level, that indicates that market makers' position on the gamma curve is negative, and they have to trade in the direction of price to hedge their delta exposure. And above that level, it's just the opposite. Market makers' position on the gamma curve is positive, and they have to trade against price to hedge their delta exposure. Okay, so those are the levels, the larger time frame, and then also the levels that are in play for today. I'm showing the same levels on my chart. First, here are the Spotgamma cloud notes in this column, and these are provided to Spotgamma subscribers, again, for a variety of platforms. And for Bookmap, they're provided in the form of cloud notes that are updated automatically. And right now, Spotgamma is using a 23-point difference between ES and SPX. And I calculated about a 30-point difference. That's what I've been using for most of the week. So I'm showing some of the same levels in my own column of cloud notes here. So these are my cloud notes here, and I'm showing here's that 4080 resistance level. Didn't really act as resistance. Here's the 407 SPY call wall. And price moved up above that, but that may be acting as resistance. And then here is the 4065 SPX call wall. And note the upper edge of the expected move. That's for ES, and ES is trading above that level as well. So the S&P 500 is trading up into territory it has not seen for a couple of weeks, 2 or 3 weeks. All right, so that is the S&P 500. I'll talk more about this when I talk about setups. All right, so let's talk about shifts in levels now. And for SPX, there were no shifts in levels. So the volatility trigger, put wall, call wall, and key gamma strike all remained at the same levels, and we'll take a closer look at the gamma levels in a few minutes and see exactly where those levels come from. And for SPY, the volatility trigger did shift higher from 400 to 402, and the call wall shifted higher from 405 to 407. And in the Spotgamma AM Founders note, they attribute that move higher to actually puts being added to the 405 level rather than calls being added to the 407 level. So the call wall is the strike with the largest net positive gamma. So if puts are added to the 405 level, that in enough quantity, that level no longer is the level with the highest net positive gamma. Put gamma is negative, call gamma positive. So 407 becomes the call wall, and anyway, that is an increase in the ceiling for the SPY and S&P 500. All right, so those are the shifts in levels for the S&P 500, and for QQQ, the volatility trigger shifted higher from 309 to 315. All right, so let's go back and let's go take a look at the gamma charts that I was just talking about. This is the S&P 500, SPX, showing the absolute gamma levels. This is the zero line with negative gamma or put gamma below, shown with the teal bars, and call gamma or positive gamma shown above with the black bars. And this is market maker's position at those strikes. So this is the 4,000 key gamma strike or absolute gamma strike. Here's the, where is it? Way down here, 3,800, the put wall, strike with the largest net negative gamma, not really in play. And then here is the 4065 level, the strike with the largest net positive gamma. And note that is the, and I've been talking about it all week, that is the short strike of the JP Morgan collar that has probably already been rolled today. I'm not sure exactly when they roll it, but it expires today, and that will be rolled. And at some point, we'll have the new strikes for the JP Morgan collar. And note that this, in the last couple of days, the gamma at this level has increased as it has become closer to expiration and closer to at the money. And the same with the 40-50 strike. So that is the SPX. Here's SPY. For SPY, the 400 key gamma strike or absolute gamma strike. And again, recall what Spotgamma said about the 405 level. Although the call gamma is the highest at that level, the call wall is the strike again with the largest net positive gamma. So positive minus less the negative gamma, put gamma, means that the 407 strike here actually is the strike with the largest net positive gamma. And again, that's the call wall. And the put wall is down at 390, the strike with the largest net negative gamma. And while we're on this screen, let's take a look at the combo strikes. And this is for the S&P 500 combining SPX and SPY into one number, an equivalent SPX number. And note the large amount of positive gamma. We're still above zero here. That's positive gamma at the 40-60 strike. And again, that is the that's a combo strike, and it's combining the SPX 40-65 and SPY 405 and 407 into one strike, and that comes out to be the SPX 40-60 level. And just one other note, especially for SPX here with the this gamma expiring today at the 40-65 level, this will change on Monday. That level, that gamma will disappear. All right, let's take a look at NASDAQ now. Oops, wrong screen. All right, for NASDAQ, we look at QQQ. And for QQQ, and it's been very bullish this week. 310 with multiple increases in the key daily levels for the QQQ. Especially in the last couple of days. So right now, the key gamma strike with the largest absolute gamma is at 310. And the put wall at 300. And the call wall at 320. All right, let's take a look at data now. I'm going to look at the gamma notional. This is market maker's position on the gamma curve. And this has shifted pretty significantly this week. I'm taking a look back. So last Friday, gamma notional for SPX was minus 450, and for SPY minus 1952, and in the now SPX has shifted to positive as well as QQQ. So from yesterday, so first of all, this is showing market makers' position on the gamma curve at the beginning of the day. And in the case of SPX, this is a positive number, indicating that market makers' position on the gamma curve is positive. And for an index, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma position, and they have to sell futures as price increases to hedge their delta exposure, and they can buy back those futures as price decreases. So in a positive gamma environment, they're trading against price, and generally that tends to subdue volatility in a positive gamma environment. And on the other hand, for SPY, this is still a negative number, indicating that for SPY, traders are long puts, market makers are short puts, and they have to sell futures as price decreases to hedge their delta exposure. And as price increases, they can buy back their short futures. So they're trading in the direction of price in a negative gamma environment, and that tends to enhance volatility. So these levels did shift from yesterday. For the S&P 500, both became positive or less negative. For SPX, gamma notional yesterday was 275. Today it's 333, so a slight increase. And then yesterday for SPY, gamma notional was minus 923, shifting to minus 556 today, so less negative for SPY. And then for the QQQ, gamma notional actually dropped a little bit. It was positive 114 yesterday, and today it's 89. So pretty neutral for QQQ. All right, let's take a look at the Vanna charts now. And note that Spotgamma did make a change to the algorithm, and it makes a little bit more sense today. So the way to look at this, again, remember the gamma notional for SPX was positive, and this is typical of a positive gamma environment. As price increases, market makers' delta notional increases, and they have to sell futures to hedge their delta exposure. And as price decreases, they can buy back their short futures. So this is showing their delta exposure, delta notional on the vertical axis, and strike price on the horizontal axis. And for SPY, just the opposite, because SPY is still negative gamma. And this shows that market makers' delta notional will increase as price decreases, and market makers have to sell futures as price decreases, and they can buy them back as price increases. And for QQQ, it's fairly neutral, slightly bullish. I give it a slight tilt. All right, so that's an illustration of what I was just talking about, and how market makers are positioned, and how they are expected to trade and hedge in these in positive and negative environments. All right, so that is my positional analysis for the indices, the S&P 500 and the NASDAQ. For stocks, actually my starting point is this spreadsheet that I track, the key gamma strike for all the stocks on my watch list. And this is, I'm looking for an indication of shifts in levels, either up for bullish or down for bearish. And I'm comparing the previous key gamma strike, that's from yesterday, in the E column, with the current key gamma strike in the D column, that's for today. And then I color code these numbers, green indicating that the number increased from the previous day, and red, if there was any red, it would indicate a decrease from the previous day. So note yesterday, an increase in the key gamma strike for Microsoft, Netflix, Nvidia, and QQQ, and today an increase in the key gamma strike for Meta, Netflix, and Nvidia. And note the double increase for Netflix and Nvidia there. So that's a starting point for further research to see if there were any additional shifts in levels. So let's take a look at Nvidia, for example. So I'm going to go to Equity Hub, and I have Nvidia shown here, and I'll talk about what I'm doing here in just a moment. So first of all, this is the history of the key daily levels and other data for the last 10 days. So this is showing for the last 2 days here, the increase in the key gamma strike from 250 to 270 to 275. And note also today there was an increase in the hedge wall from 262 to 265. And that's an indication that traders are closing puts and buying calls or adding calls. So far bullish, and also the increase in the put wall, and all that is bullish. 3 of the key daily levels increasing, definitely a bullish signal for Nvidia and some other stocks. So some other stocks on my watch list, and I'll go through those setups one by one, also had multiple levels that increased from the previous day. Now, on the other hand, so that is helping to form one thesis for the day, and what I would call my primary thesis for the day was bullish, based on the increase in levels in the indices and in multiple stocks. And then on the other hand, it is Friday, and for Friday we typically look for a call gamma unwind, and that's more prevalent on the monthly expirations. But for many stocks, especially, traders will buy calls that expire during the week. They will buy calls that expire on Friday. So today there are some stocks with calls that are expiring today, and the way to discover that in Equity Hub here, and stocks that have a significant amount of gamma expiring today, is to sort any list of stocks. I'm sorting my watch list here by this next expiry gamma percentage, and I'm looking for a percentage around 30 or above. The next thing to look at is this top gamma expiry date, and that's today. So I see that especially Nvidia here has almost 39% of a gamma expiring today. So the way that works is, again, traders are buying calls during the week, market makers are selling calls, and they have to buy stock to hedge their delta exposure. And these calls, 39% gamma expiring today, a lot of the calls are expiring today. They are quickly losing value due to charm, the change in delta as time passes, and traders can either take profits. They may be taking profits, or for whatever reason, market makers delta exposure will decrease due to charm, traders taking profits, and they can buy back they can sell their long stock hedges, and that is generally a pretty reliable strategy excuse me, for looking for shorts in stocks that are call dominated, as we can see here above a certain level. That's the green shading here, indicating call domination above the 275 strike, and that is also the key gamma strike in the call wall, and put dominated below that. That's shown by the red orange shading. All right, so that given the increase in the levels for a number of stocks, and we'll go through those setups, my primary thesis for the day was bullish, looking for a continued move higher. And then the alternate thesis was looking for a call gamma unwind in the, especially in these stocks right here, the stocks on my watch list, all with close to 30% or higher of gamma expiring today. And let's just, we'll take a quick look at some of these other stocks. And call dominated above a certain level. Not so much for Tesla, but definitely for Nvidia, Snowflake, and Netflix. All right, let's take a look at some setups. And I'm going to go with the primary thesis first. So let's go to Hero now. And I'm going to start with Amazon. And Amazon had two key daily levels increasing, the hedge wall and the call wall. Let's zoom in. So there was a move higher, move lower, and then what I'm looking at here is this divergent setup long in the morning. So those of you who may not be familiar with this chart, this is Spotgamma Hero, hedging impact of real-time options. And this is showing options trades and market maker hedging activity on this chart in real time. The white line is price, and the purple line is the Hero signal. And a rising line indicates positive delta trades. Traders are positive delta trades would be buying calls and selling puts. So what I saw this morning, I'm following the purple line first. That starts increasing around 10 o'clock, and then around 10:20 price makes a lower low and then starts to move higher. So note the time, that's just around 10:20. Then price moves higher. Let's go take a look at Bookmap now. And we'll go to Amazon. Not a lot of range today, but there's that long setup just around 10:20 as traders were taking positive delta positions. And note the order flow is definitely bullish. Looking at the volume dots, these green dots showing buy minus sell are definitely dominating order flow. Very few pink dots. So this is indicating market buy orders are dominating aggressive buyers. So that's Amazon with a divergence long. All right, let's take a look at Meta. And for Meta, the key gamma strike increased, the hedge wall actually dropped, and the put wall increased. So 2 out of 3. Let's go take a look at Hero. All right, so just to be clear about what I'm doing, so I keep a list. I showed my spreadsheet for the key gamma strike, but what I do is I also let's go back to Bookmap. I have this C levels column for futures and for stocks. And I am filling out a spreadsheet every morning with all the levels, and I want to display the up-to-date levels on my charts. So I just fill out the spreadsheet and update the levels on my charts. So to do this, I look at, let me go back to Equity Hub, and I go to the history, and I just start in alphabetical order. So for Amazon that we just looked at, I'm scanning and comparing today all the key daily levels with the previous day, and then I'm noting that in my handwritten trading journal. I just have a list of stocks. I'm not filling out a spreadsheet for all this like the Gamma Strike spreadsheet. I am looking at this, making a note of my journal, and then I'm circling the stocks that I am bullish on or bearish on using different colors. And for Amazon, I was bullish based on the slight increase in the hedge wall, and also the increase in the call wall. And I'm doing that for every stock on my watch list. I'm filling out, filling out this spreadsheet with the updated levels, and then I'm also making a note of my journal, whether I'm bullish or bearish on the stock, or have no opinion. So again, Amazon was the first one in the list. Now let's take a look at Meta. And note here the increase in the Gamma Strike. That was shown on the Gamma Strike spreadsheet. A decrease in the hedge wall. Increase in the Gamma Strike. Decrease in the hedge wall, an increase in the put wall. Overall interpretation is still bullish. Can always confirm with hedging flow and order flow. All right, let's go take a look at Hero now for Meta. Zoom in. Look at the morning session. Strong confirmation between options trades, hedging flow, and price action. So let's go back and take a look at Bookmap now for Meta, and note the quick jump up. Not much chance to get in unless you are very fast. We'll just zoom in on the early session. So unless you were really prepared for this and were fast again, Meta jumped right up to the 209 level, did a couple of retests, and the primary target was at the 207 call wall, Gamma Strike, and note all the liquidity at that level. Those are passive sell orders and act as a magnet for price. Buyers seek sellers. Zoom back out to the full chart, and that level has acted as resistance today. All right, so that was Meta. That was the second stock on my list. And now let's go back to Hero. And the next stock was Netflix. And I'll come back and look at Microsoft. There were no changes in levels for Microsoft. And for Netflix, the key gamma strike and call wall did increase. So the call gamma, as long as traders are taking positive delta positions, so they started initially traders were buying calls, shown by this rising orange line. I've separated out the puts and calls. Traders were buying calls, and they've been selling puts, continue to sell puts, even though they started selling calls and price leveled off. And then as soon as they started, or I guess actually before they started buying calls again, price started to increase, traders started buying calls and are moving price higher. So as long as traders are taking positive delta positions here, this call gamma unwind is not going to happen. Market makers still have to buy stock to hedge their delta exposure. So positive delta trades in Netflix continue today. And it's easier to see with the total line here. Hero rising, price rises, hero levels off, really to about here, then starts to increase, and this is combining the call and put signal, and price moves higher. I have Netflix on my in Bookmap on my other computer. If we have time at the end, I'll go take a look at that. All right, let's take a look at NVIDIA now. And for NVIDIA, it looked like there might be a potential for a call gamma unwind. That was at the top of the list with almost 39% gamma expiring today. It looked like NVIDIA had found resistance at the 275 call wall key gamma strike. And just to note from Equity Hub, NVIDIA, on the other hand, had three levels, key daily levels. I mentioned this before, increasing the key gamma strike, the hedge wall, and the put wall. All right, let's see what's driving price, and we'll go take a look at Bookmap. So mainly call buyers. Call buyers are in buying calls. Market makers are selling calls, so they have to continue to buy stock to hedge their delta exposure as long as traders are taking positive delta positions. So let's go take a look at Bookmap, and we'll come back and take a look at Microsoft. So here's NVIDIA. Let's zoom in on the morning. So initially it looked like this 275 call wall key gamma strike level might act as resistance. There were a couple of tests and failures. Here and here, but that was turned out to be just pullbacks for long entries as traders So let's go started buying calls. Let's take a look at Hero again and focus on that action from about 10 to 11:30. All right, so from 10 to 11:30, traders were buying puts and buying calls. Let's just zoom in on this. So I would say up until this time at about 11:30, put buyers were dominating. I'm looking at this notional value right here, minus 73 million versus positive 66 million. Orange line calls, so buying calls and buying puts, positive delta for calls, negative delta for buying puts. And then over time that has started to dominate. Now call buyers are dominating and traders are starting to sell puts. And then as they start to buy puts again, prices leveled off around 12:50 to 1 o'clock. So call buyers are still dominating slightly. Let's go back to Bookmap. All right, the next, let's take a look at Snowflake. Just like yesterday, beautiful uptrend. So for the last couple of days, Snowflake has really caught a bid higher. And Snowflake had one level increasing the call wall, and that was also on the potential call gamma unwind list. And let's take a look at Hero for Snowflake. Separate out puts and calls. And at least in the early morning session up until about 10:45, call buyers were definitely dominating. And that's what took price up to the 150 level. So let's go take a look at Bookmap. 150 just being a big round number. There was not necessarily any significant liquidity at that level. Let's go, I want to take a look at Equity Hub and see if we can get more information on the significance of that level. So let's go to Snowflake. Here I'm going to look at the put call impact chart, and this shows the gamma levels. Let's zoom in on this. And this is going to be similar to the S&P 500 and also the NASDAQ gamma levels that we looked at, that I looked at for my positional analysis. The exception is that Spotgamma makes a different assumption for single stocks than they do for indices. So for indices, Spotgamma assumes that traders are long puts and short calls. Market makers are on the opposite side of that, so they are short puts and long calls. Hence the volatility trigger gamma flip level from negative gamma below to positive gamma above. On the other hand, for single stocks, Spotgamma assumes that traders are either long puts or long calls, and so market makers' position is always the opposite of that, short puts, short calls. So in this case, this is the 150 level. I note the dominance of gamma at that level, both call and put gamma, and that strike did act as resistance earlier today. Significant gamma level at 150. And notice most of the gamma is concentrated below that level. Call gamma from 150 to 140, and put gamma from 150 down to 120, which is still the put wall. All right, for Snowflake, the call wall did increase. All right, let's go take a look at Hero again. So here we are. And again, call buyers dominating up to the 150 level. And now they've come in again. And prices moving higher. Let's go to Bookmap. So there's Snowflake, definitely bullish order flow. Look at all the green dots. And I've been following Snowflake for a couple of weeks, and the order flow is typically pretty easy to read in Snowflake. Sometimes for stocks like AMD, order flow can look bearish and price can be rising, but it's a lot easier to read for Snowflake. Notice the rising cumulative volume delta, all the green dots, and market buy orders. Buyers are dominating, call buyers are dominating, and prices moving higher. All right, so there's a request to look at Tesla, and that was Truman. That was next on my list. Let's take a look at Tesla. And Tesla was on my stock list with the for bullish setups. Both the hedge wall and put wall increased in Tesla. And Tesla's been pretty choppy, trading in a range for the last, at least the last week it seems like. And today it's just broken out into a beautiful uptrend. Let me just adjust the size of these dots, tone that down a little bit. So let's go take a look at Hero and see what options traders are doing. There's Tesla. And this is just an incredible confirmation. Strong correlation between hedging flow, options trades, and price action. And we'll see this is driven by call buyers. And if you're looking for a long setup in stocks, this is what you want to look at. Traders buying calls, market makers selling the calls, and they have to buy stock to hedge their delta exposure. And as price continues to increase, they have to continue to buy stock to hedge their delta exposure. All right, so that's Tesla. So really, Snowflake and especially Tesla were the best long setups of the day, with call buyers dominating. All right, let's take a look at a couple of other stocks on my list. And any questions? So QQQ and ES, yeah, we'll take a look at those. So let's go take a look at. We'll take a look at QQQ. So in QQQ, this is not quite an easy a read, but options traders were generally taking positive delta positions up until about 12:30. Then they started fading the move higher, and that's often the case with indices. Let's see what call buyers were doing. And this is also typical of indices. Traders are buying calls and buying puts, and it's just a matter of who's winning, call buyers or put buyers. Let's zoom in on this a little bit. So up until about 12:30, 12:45, it looks like the call buyers were winning. I'm looking at this notional value here, positive 537 million for calls, negative 442 million for puts. Call buyers were winning, prices moving higher. Let's zoom out again. And now traders have started selling calls and prices leveled off. Let's go take a look at Bookmap. And price is continuing higher. It looks like it has somewhat leveled off here at the 319 level, and it looks like the 320 call wall is on deck here, and note all the high liquidity at that level. So if price continues higher, that would be the natural target, 320 call wall. Let's go back and take a look at Hero and see what options traders are doing right now. We'll go back to the total signal. And let's just we'll take a closer look, go back to a 30-minute look back period, rolling window period, and it looks like options trades shifted bullish or around 1 o'clock, and now that has leveled off. Let's go back to the full day. And the reason I do this is when I shift to a shorter time frame, that's something that you can do in the afternoon. If you're looking to trade and want to get a more relevant signal from Hero, in some cases that works. It's worth taking a look at a shorter rolling window rollback period, look back period. All right, let's take a look at the S&P 500 now. And this is a combined signal for SPX, SPY, and XSP. XSP is insignificant compared to SPY and SPX. Let's zoom in on this. So this is combining signals for, again, SPX and SPY into one signal for the S&P 500, and this is typically what I look at whether I'm trading ES, SPY, or SPX options. And so far today, net bearish, especially in the morning. Traders were fading the move, then they kind of joined the party, and then around 12:30 started taking negative delta positions, and this from about 11 o'clock on, this Hero signal was in sync with price action, or price action was in sync with options traders. All right, let's go take a look at Bookmap, and we'll wrap it up with the S&P 500. We'll start with the ES. And note these levels are different than from the actual levels. These levels should be a little bit higher. This combo L3 level and the 4100 level are actually a little bit higher. And it looks like afternoon price has really kind of centered around the 407 level and just above. And that's the SPY 407 level. And note the concentration of volume here in the session volume profile around the 407 level. And order flow has shifted somewhat neutral. CVD moving lower. From about 2 o'clock on, there have been no, there were some iceberg buy orders here as price moved down below the 407 level, and stops, this shown by this yellow line, has leveled off. Not many buy stop orders driving price higher. All right, let's take a look at SPY. And again, a concentration of volume between the, just around the 407 level, above and below. All right, then finally there's a request to see SPX. So we'll go to Hero for SPX. Now again, RJ, I look at this total signal. This is giving me all the information for the S&P 500. SPY and SPX, both are significant. But if you do want to look at SPX, here it is. I'm going to zoom in on just the RTH session here. So this is the, actually that's 8:30. Let's zoom in a little bit more. So this is just starting at 9:30, and SPX, there's been a closer correlation between hedging flow in SPX and price action. Separate out puts and calls. And as usual in an index, traders are buying calls, buying puts, and for right now in SPX, the call buyers are winning. Let's just go back. So from this chart, it certainly looks like SPX call buyers are dominating price today. Let's go back and take a look at the total signal. One more time. Break down calls and puts. So looking at the total signal, the put buyers are dominating or leading. They're not really dominating price, but 3 billion versus 1.43 billion for calls. All right, so RJ, there's your breakdown of the SPX plus SPY. With that, my time is up. I'm going to wrap it up for today. And we'll look for the shifts in levels next Monday as this 4065 level and all the gamma at that level goes away due to the role of the JP Morgan collar. All right, I want to thank you for watching. Thanks for your questions and comments, and I will see you on Monday. Have a great weekend, everyone.